Hello, everyone. Welcome to another edition of Tip Tuesday. Jeffrey Nance here with you. Today, our topic of discussion is automated orders. So, once you have set up and established a brokerage account, you will fund that brokerage account. Now, there's lots of options that you can go with. You just need to find one. What are some criteria you should probably consider when choosing a broker? Number one, I would say, is what are the commissions? That's something people think about a lot. How much do I have to pay per trade? And then, depending on your level of education, particularly if you're going to use options, you certainly want to look at that. That's normally where you see the biggest discrepancies is when it comes to options trading. So, how much do they charge per contract? That'd be something to consider. The second thing that I would be interested in is what are some of the features that this particular broker offers? So if they charge a little bit more for commissions, but they give me charting software, the other one doesn't, does that matter to me? If so, how does that work? What does that look like? Number three, how reliable is it? Obviously, this is a big deal. So I want something that's going to be reliable. I want to be able to get into trades when I want to get into trades. I want to be able to get out of trades when I want to get out of trades. So reliability would be another thing to consider. And then finally, are there any restrictions? So do I have to have a certain amount of money in order to trade at this level? Can I trade options if I know how? Do I have to, fill out any paperwork? Do I have to go through any courses, or you just treat me like an adult and let me trade whatever I want to trade, whether I know how to do it or not? So those are some things for you to consider. Now, once you've established that broker, you have to fund the broker. So remember, this is like it's like a bank account, like a checking account in a lot of ways. But this broker is going to be the actual kind of go between you and the market maker. So you're going to want to buy these shares or buy these contracts or sell these contracts, and your broker is going to establish that connection. So they're the people that will allow you to trade. So the money has to be in your account to trade. There may be some question marks there when it comes to just things like what type of account do I have? Do I want to have a margin account? What does that mean? So some things to think about there. There are different types of account. Obviously, you've got your Roth, your traditional. Those are your individual retirement agreements. So obviously, you can set that up. What about a business account? Some people allow businesses accounts, others don't. They make you go through a bunch of hoops. That would be something to consider as well. So you need to think through that. And then when it comes to funding it, there are lots of ways to fund it. You can do an ACH transfer. You can wire the money in. You can send them an actual check. Lots of ways to do that. But you're going to fund that account. The money will be there. And then it's about trading. So I hear people say a lot of times, I would like to trade, but I don't think I have the time to do it. And one of the things that you have to kind of think through here is what is required of me from a time perspective. So when I commit to this, what is required? Well, when it comes to the actual broker, very little. All right. So it's not going to take you much time to actually enter into a trade. Now, central time zone, the market's going to be open from 8:30 Central to 3 o'clock Central. You can adjust accordingly for your time zone. So we're going to encourage you to trade during open market hours. So you can trade stocks. You can, in theory, short stocks if you know what you're doing and all the pros and cons of that. And then, of course, you can do all of your options, your spreads, these really expansive opportunities that you have through the different styles of putting options together and creating these different spread opportunities. So now that we've done all that and we've established the type of account that it will be, individual, whether we're going to do a joint account, what that looks like. So you get all that stuff set up, and then now you're funded. So at this point, it's just about trading. And what you'll find oftentimes is that it should be fairly simple. A lot of brokers now are going to similar formats so that they look pretty similar. So when it comes to buying a stock, you just click on stocks. Normally there'll be a tab that says stocks. You go click on that. You type in your ticker symbol, simply put in the number of shares that you want to buy and click send. And, depending on what kind of order you're doing, There you go. You're in. So good to go. When it comes to options, a lot of these, again, look fairly similar. You're going to have a middle column most of the time. That's going to be your various strike prices, calls on the left, puts on the right. And then you're just going to simply go in there and select the options that you want. Again, if it's a multi-leg trade, you would go in there and select this one, that one. Some of those work differently. I would say that this is one of those areas where one broker to another can start to look a little bit different is when it comes to your multi-leg trading. When you're getting into the spreads, credit spreads, debit spreads, even fancier stuff with your butterflies, condors, etc. Might see a little difference there in how that works. So that might be something that you want to work through as well. Now, as long as the market is open, it's pretty easy. But a lot of people say, well, then I've still got to sit here, Geoffrey, and just watch this stuff. And then I see things moving. And like today is a great instance where there were a lot of opportunities to trade. There's a particular pattern called a flag pattern. We talk about it a lot. I talk about it a lot. One of my favorite strategies, and a student posted up several of those on a site that we have on our community site. And a lot of those were at good buy points today. So several of those just started their move up. And if they follow through with their pattern, they'll move up again tomorrow and the next day at least. And so they'll be in pretty good shape. But a lot of those were ready to move today. And what I thought we might do is just kind of walk through something that we actually talked about in that live hour of trading. We offer up a course to our Trader Pro students. It's a live trading hour from 2 o'clock to 3 Central, that last hour of trading. And a student pointed out a particular stock. And I said, yeah, guys, look, this one looks pretty good. And let's go ahead and just set an alert. So now this is going to be done. I'm going to share this here with you guys. But this was just done through my actual just charting software. So you can set alerts and alarms. You can either do those through your phone. There's a lot of great apps out there. Most of them really don't even cost you any money. There's a lot of them that are free, or your charting software ought to have this as well. So I'm just going to show you a little bit about what we did just yesterday, and just kind of talking through a trade setup and how you could apply an automated order to something like what we saw last night. So they were looking at this particular stock, and it was moving down. So what we talked about is to say, look, and I'll zoom in here if it'll let me. Yeah, okay. Just so you guys can see a little bit better. And so we thought this would come down this morning, and that it would maybe hit something over here and then start to turn. So what I said to them is, let's go set an alert. So you can see up here, I got a message. So MU passed down through 76.50 this morning. So when that occurred, this broker then sent me an alert, 76.50. So at 76.50, I go, okay, well, let's see what's going on here. Well, you guys can notice here, I'm going to go over here to like we'll do like a 15-minute chart just so you can kind of see what's happening early this morning. So early this morning, each one of these candlesticks represents 15 minutes. But certainly, I mean, it was in the first 30 minutes of trading where this occurred, where it broke through 76.50. Then it dropped even further. And then that's about when it started to make its move up, right over here around 9:45 Central Time. That's when it started to come back up. And then you can see it went from a low around 75, basically 80-ish, and then actually ended up doing pretty well today. Closed up about $1 from right around this area. So once it kind of flattened out here, over here in this area, then it started to make that move up. And again, we'll see if it does move up again tomorrow and the day after that. But went from negative to closing in the positive here, which is a pretty cool thing to see there. So you might be saying, well, I don't know, am I supposed to sit in front of my computer to be able to do this? Do I have to do that, or would I have been able to do that? Well, nope. The point of today is that you can set automated orders. Now, specifically, we're looking at automated orders within our broker. So what does that look like? Well, once we go over here into our broker, we might be able to, plug in something, and I'll just pick a random symbol here like Cisco. And we'll just say, I see some prices over here. Cisco's at $57. Let's just say I bought Cisco. and I bought it at $1.14, and now it's worth $1.74. Can I go in and enter an automated order? Well, the answer is quite simply yes. And in fact, you could actually, depending on how complex you wanted to get with this, you could actually enter an order to buy at a certain price. Now, essentially, what you have to be careful of here is that you're basically saying, I need you to buy at this price or lower. So we don't really want you to do too much with the automated orders on entry. Now, you can do this, or it can be done. Most of the time when you're listening to us at Tradeway, we're gonna talk about automated orders more so from an exit point. So once I'm in that trade, what does that look like? So let's just say we had bought this option here at let's say $1.14, I think is what I said. And it moved up and it's worth $1.74 now. So I'm set here to make 60 cents a share. So with one contract, it's $60 or $60. If I had 10 contracts, it'd be $600. So if I'd made like $600 in say a day or two, and I said, you know what, I'm good here. I might want to go ahead and sell this and take some profit. What would that look like? Well, what you can do quite simply, guys, I'm just going to click on this 174 right here. And you'll notice it just simply brings up this little red S that stands for sell. And basically then, if I was already in this order, it would be STC. Now it's STO right now because I don't have this position, or I'm not already in this position. If I was, then I would have gone through positions. It would have recognized this. I would have clicked on this, and then it would say sell to close. And then I would be in a position now to then set an order. So what type of order? Well, most likely you're going to want to set a limit order. And basically a limit order says, hey, I need you to sell at my price or better. So if I say I want you to sell at 174, I bought at 114, I want to make 60 cents or more, then that limit order would basically then be in effect whenever the option price was 174 or higher. So that would have executed or filled, FILED, today without me having to do anything to that. There are time in force here. I could have made that a day order, GTC. So if you want to set it every day, the way a day order works, it either gets filled or executed that day, or it just pushes it out to the next day. So that order just stays active. So maybe with your automated orders, you go with a GTC, which is good till canceled. So either it executes like you wanted it to, or you would go in there and cancel it. So you could do that. And just simply, once you're in a trade, now you could say, I want you to sell up here. You could set that automated order. So you can set an automated order to sell at a higher price, or what you can do is you can go in and set a stop out. And most of the time at Tradeway, when we're talking about our automated orders, most of our students are not necessarily too concerned, but more and more people are doing this now, because again, you can do this with your spreads, credit and debit. And a lot of students are doing this now with their credit spreads in particular. They're setting orders to sell once they made like a 50% profit or something like that. I see more and more people doing that recently. But a lot of our students, especially for beginners, they're not so concerned about, selling at a certain time once this play has worked the way that they wanted it to. They're more concerned about, what if it goes the opposite way? What if it turns and goes down? What's that going to look like? How can I stop out of this? I'm going to take an expense, but I want that expense to be as small as possible. How do I do that? Well, again, you would go up to your positions. You click on your positions, and then once that entered that order, you would see your positions listed there. You just simply click on your position, and then what you'll be able to do is just come down here and click market, or stop market is what you're looking for. So your broker might say stop, it might say stop market, but either way, you'll notice that it populates here. And what we're doing is, just remember, this is a stop loss. I want to stop losing. So if I bought at $1.14, let's go back down here to this one just so we can kind of see when it's here. So let's say I bought at $1.14, and now I say, you know what? If I'm going to lose 14 cents, I want to stop out at $1. So if this option gets to $1 or less, go ahead and stop me out. Now, guys, I can make that a day order. So I either get stopped out or I'm still in that trade. And if I'm still in that trade, that's a good sign that I'm, it's not dropping that much because I'm still in the trade, that's a good thing. I can make it a GTC, which again is good till canceled. And then that order is just going to stay there either until it's executed or till I decide I'm going to change it. And again, we can change this. Now, you say, Geoffrey, are there charges, commissions for each of these stop orders? No, you don't get charged for stop orders unless it is an executed or field order. Now, of course, you are going to get charged for field orders. Now, some brokers don't charge you for exiting trades, only for entering them. So again, that's something to consider when you're looking through what broker you want to set up anyway. But you will probably get charged for a field order. So if your stop loss is executed, then you're in it. So let's take a look at Cisco here. And let's just say I did buy this thing at 114. And I go in here and I set a stop loss, stop market. So it sells at $1 or below. So if this option were to reach down to $1 or lower, now again, this is going to be based on the bid price being $1 or lower. Notice with a 9-cent spread here, it could be, say, 91 by $1. So just because I set it at $1 doesn't mean it's going to stop me out at $1. It gets triggered at $1, then it becomes a market order. So I could, end up stopping out at 91 cents, could be 95, just somewhere in that range between 91 and $1. And if I'm okay with that, listen, all I got to do is set that order. Now review, I send, I put it in there, and then I can go about my day. And one of two things is going to happen. Either Cisco is going to move up and I'm going to be making money, or Cisco is going to move down. And if it moves down enough, then this will become an automated order. I know, oh, you know what? I lost, 20 cents or whatever on this trade. No biggie. That was better. That's a small expense. I can recover from that pretty easily. Or I come back, I'm still in the trade. What does that mean? Well, the stock either went, kind of sideways or up, but regardless, my option hasn't dropped down to $1. So now I can kind of come in here and assess, do I want to do this tomorrow? But again, I don't have to be sitting here at my computer. I could be off at work. I could be at Six Flags. I could be on vacation if I wanted to. I can set an automated order. And, if a week later I come back and this option is still, obviously I need a different expiration date for this example, but let's just say I was out in the next week. I could come back next week. And as long as it hasn't expired and it hasn't dropped below $1, I'd still be in that trade. So I don't have to be sitting at my computer if I can take advantage of automated orders. So again, your automated orders are going to come through your broker because that's where the transactions actually take place. They actually take place in your broker. Now, again, you could do similar things with a paper trading account just so that you can get used to that. You want to work through that process just like you would with your real broker. That's why we encourage you to do your paper trading, then your small money trading, because you want to work through the process here of considering what are the types of trades I can do, what are the orders that I can enter, and then you want to make sure that you're entering them correctly. So, guys, you can do this. You can do this. I don't want you to make time a stumbling block and to say, you know what, I just can't make time for trading, or I don't want to be in a trade and not know what it's doing. Well, you can be in a trade. You don't have to watch it all the time. Again, you watching it isn't going to make a stock go one direction or the other. Okay. It's just not. You can certainly pray for your stock. Many of our students do. But sometimes God is like, wow, that's a pretty terrible trade. And I want you to learn a good lesson here. And you're still going to have a stop out. So you do want to take advantage of automated orders. Some of you guys are going to take more advantage of that than others. But again, we want you to see, don't let this be a hindrance to you trading, just saying, I don't have time. Using automated orders, using alerts might allow you to understand what's happening. So all you got to do is, do your homework at night, set some alerts, see that pop up on your phone, and then go, all right, you know what? Let's go put in an order here. See if I can get in this trade real quick, and then let it go. So that's it. That's our tip for today, guys. Don't be afraid to play around, get adjusted and used to automated orders, because for many of you, it might be that next step in kind of helping take some of the stress away from being in a trade, knowing that you can have that automated order, that you can stop out. And then as you become more advanced, you might even realize, wait, there are ways that I could actually get into these trades too, and be okay with that. It's just a little bit more complex than just simply setting a stop out. So That's our tip for today, guys. If you have any questions about any of this, let us know. We'll be glad to help you out as always at Tradeway. We have lots of trading and teaching opportunities, and want to encourage you guys to check out our website to learn more about what those things are, or to check your email. We send lots of opportunities through email as well. So let us know what you want to do and how we can help you reach your goals. Thanks.